everyone, how's you all? Today we discuss about vehicle insurance in the United States. Vehicle insurance in the United States, also known as car insurance or auto insurance, is designed to cover the risk of financial liability or the loss of a motor vehicle that the owner may face if their vehicle is involved in a collision that results in property or physical damage. Most states require a motor vehicle owner to carry some minimum level of liability insurance. States that do not require the vehicle owner to carry car insurance include Virginia, where an uninsured motor vehicle fee may be paid to the state, New Hampshire, and Mississippi, which offers vehicle owner the option to post cash bonds. See below the Privileges and Immunities Clause of Article 4 of the US Constitution protects the rights of citizens in each respective states when traveling to another. A motor vehicle owner typically pays insurers a monthly fee, often called an insurance premium. The insurance premium is a motor vehicle owner pays usually determined by a variety of factors, including the type of covered vehicle, marital status, credit score, whether the driver rents or owns a home, the age and gender of any covered drivers, their driving history, and the location where the vehicle is primarily driven and stored. Most insurance companies will increase insurance premium rates based on these factors and less frequently offer discounts. Insurance companies provide a motor vehicle owner with an insurance card for the particular coverage term, which is to be kept in the vehicle in the event of a traffic collision or proof of insurance. Recently, states have started passing laws that allow electronic versions of proof of insurance to be accepted by the authorities. Coverage generally, consumers may be protected by different level of coverage depending on which insurance policy they purchase. Coverage is sometimes seen as 20, 40, 15 or 100, 300, 100. The first two numbers seen are for medical coverage. In the 100 by 300 examples, the policy will pay $1 lakh per person up to 3 lakh total for all people. The last number covers property damage. The property damage can cover the other person's vehicles or anything that you hit and damage as a result of the accident. In some states, you must purchase personal injury protection, which covers medical bills, time lost at work, and many things. You can also purchase insurance if the other driver does not have insurance or is underinsured. Most of not all states require drivers to carry mandatory liability insurance coverage to ensure that their drivers can cover the cost of damage to other people or property in the event of an accident. Some states, such as Wisconsin, have more flexible proof of financial responsibility requirements. Commercial insurance for vehicles owned or operated by businesses functions quite similar to private auto insurance, with the exception the personal use of the vehicle is not covered. Now, the insurance providers are in the United States in 2017 the largest private passenger vehicle insured providers in terms of market share was State Farm, which is 18.1%, and GEICO, which is 12.8%, Progressive Corporation, which is 9.8%, LSAT, which is 9.3%, and USAA, which is 5.7%. Insurance is secured either by working with the independent insurance agent or with an insurance broker who is authorized to sell insurance policies. Some can represent from several agencies or growing number of online brokers who provide policy purchases through online sites. Thank you so much guys. If you want more information, then please subscribe my channel, and one must thing, please comment below.